All right. So with that overview on the financial for 2023, I'll hand it back to our CEO Kevin to give us an overview of what's to come next for 2024 and beyond. Kevin.
All right. Thank you both, Tatisha and Henri, for great presentation. If I should say so myself. But let's look at this sort of macroeconomic environment that we believe we were likely to be operating in for 2024, because that is going to steer what our strategy is for this year. We have been talking a lot about what the Fed does, and we all can speak about the correlation between Fed action and the impact it has on global interest rates, for example. While inflation is moderating in the US, the expectation still remains that interest rates will remain elevated. I think Jerome Powell has signaled that, holy horses don't expect any rapid decline or any soon decline in interest rates. So we expect that benchmark interest rates, will remain elevated for a while longer. Juxtapose that against a major event that is likely to happen in the US, which is their presidential elections, to happen in November of this year. Typically during an election period, there tends to be high levels of spending and some levels of economic boost. So that could likely have some good impact on commercial real estate, particularly in that market. And, again, that has some contagion effect for other markets. What we are seeing, though, is that while interest rates remain elevated, there is some distress that is taking place in commercial real estate, largely because of the high levels of borrowing and the types of borrowing. Most of those borrowings are in variable rates, or they are fixed and variable. So some of those facilities are now repricing or coming due or maturing, and they're now, refinancing them at higher rates. That's a concern for a number of commercial real estate companies as well as financial institutions that are exposed to commercial real estate. And we see that as opportunistic, as it could create options for investment in distressed commercial real estate. Again, as we like to repeat, and Andre touched on it, is that our key strategic imperatives for 2025, by the end of 2025, we hope to have our total assets under management, that's owned and managed, at $100 million US. And of course, we want to achieve average return on equity of about 10%, or we did so in 2023. For that, we're very grateful. And to boost our funds from operation from 1.4, which was last year, to 2 million by the end of next year. Some of those things that are going to guide the strategy so that, we're closer to achieving those numbers is, and we spoke about this since our AGM last year, that we're going to continue to monetize some of our assets. We do have a particular hold period for our investments, typically 5 to 7 year hold periods. Some of the assets in our portfolio are nearing the end of that cycle. We did take advantage of some opportunities that came our way to monetize some of the assets in the portfolio last year. We spoke about the last of the condo and the Dumfries Road property. There are some other assets in the portfolio that we are looking at monetizing. The proceeds from the sale of those assets, we hope to deploy into new value-add commercial real estate opportunities, which is sticking back with our core business, and the thing that has allowed us to achieve this level of growth and phenomenal performance over the years, is by sticking to our core of investing in value-add commercial real estate, and benefiting from both the uplift in fair value from the improvements that we make to these properties and the higher rents generated from these properties. So we're doubling down on that strategy. Again, why it is important, because generating cash for our business is our core. And, we talk a lot about whether it's funds from operations or cash generated from operations. Those are important because paying dividends is something that we like to say that we continue to do consistently, so that, investors will always take a favor to KP. We like to keep dividends consistent also, because in terms of investment options, we would like to look at KP as your preferred investment option, and the returns that you get from investing in KP stock is greater than many of the other investment opportunities out there. We also are looking at widening our geographic reach, extended beyond the hurricane belt. We are investing in Jamaica and the Cayman Islands, and we know how those islands are susceptible to hurricanes. So we are expanding our geographic reach, and there are some opportunities that we're looking in markets far and wide. And we're hope to make some announcements about some acquisitions in new markets in 2024. Again, to achieve that 100 million target by next year, we have to do that incrementally. We're hoping that by the end of this year, we could achieve assets under management of $80 million. And there are many ways of achieving that. We can do that strategically by leveraging KP's brand. KP does have a fairly strong brand in the real estate investing space, and there are opportunities for us to leverage that brand through, strategic partnerships or utilizing the capital markets to help us to achieve this goal. And again, we spoke about dividends. That's something we want to ensure that we're continuing to generate immediate cash flows, which would explain the skew in our portfolio more towards cash generating real estate options as opposed to greenfield opportunities, which take a longer time to get to cash. Now, the final thing I want to touch on is our stock price, which I'd mentioned earlier. And, I wanted to figure out a way how we could address the issue of the stock price. And, I was thinking about it over the weekend. How will I address this? And this gem popped into my inbox from Simply Wall Street, which I think sums up something that we've been saying for each earnings call and for each investor briefing we have. And it's that last sentence that is the important part for me, is that generally our performance has not kept pace. The stock price has not moved at the same level as which our performance as a company has been. Andre showed you a graph showing what our 5-year CAGR has been, both for rental revenue, net operating income, as well as net profit. Both of them are in double digits. Net profit on average has grown over the last 5 years at an annual rate of 16%. Usually you would look at that kind of growth rate and say that's the sort of PE at which a stock should be trading, because it's reflecting the growth rate of the company. Obviously, you would have some discounts to that rate because of how thin the market is. But typically, currently we are trading at a PE of 9.7, 9.8 times earnings. According to Simply Wall Street, for our sector, our industry, that should be in the region of about 14 times earnings. So we believe the stock is extremely undervalued. And I mentioned earlier before that we have been trading at a discount to book value for quite some time now. And it's important I make a point about book value, and I made a point in previously, is that we've tended to be very, very, very conservative in how we treat with fair value uplifts on our real estate portfolio. Usually we value our properties on a 2-year cycle. So on the 2-year anniversary of acquisition of a property, that's when we do a valuation on that particular property. So there's a cycle that we tend to use. So we're not doing fair value adjustments every year on that particular property. So different properties have different cycles. The other thing about that is that we tend to be very conservative in terms of the fair value that, at a board level, at a management level that we decide to take. We tend to keep it fairly conservative. And sometimes we'll make a discount on the value, the appraised value that we receive, just because to err on the side of conservatism. That has worked in our favor. If you look at our financial performance in 2023, we took a similar approach with the Dumfries Road property, for example. And by the end that transaction was able to close, we were able to close at a value higher than the appraised or the carrying value of that property in our portfolio. So our conservatism pays off. And I say that to say that although you will see a book value per share of $8.39, if we were to use the appraised value for some of our properties that would actually reflect a higher figure. That perhaps explains why in most of the major economies, REIT stocks tend to trade at a premium above book value. And from what we've looked at in a lot of the US REITs, particularly in that match our type of investment strategy, which is, a multi-sector REIT, they tend to trade anywhere between 1.2 and 1.6 times book value. And right now we're trading at roughly 90% of book value or less. So it's interesting. It's something that we want to continue to have more conversation and dialogue with the investing public. And this is why a forum such as the earnings call through LGI helps to facilitate those discussions so that we can ensure that, there is reward for performance. I think there should be some alignment between what we as managers and even the board of directors do to ensure that the company continues to perform extremely well, that is also reflected in the stock price. So we're open to continuing that dialogue and to providing the market. That's what certainly my job as CEO is, to provide as much information about the company, which is why we've adopted policies, as Tatisha mentioned earlier, about greater transparency. I think we're a fairly transparent company. We do have a dedicated investment officer. If there are any questions you have, you want minutes for AGMs and that sort of thing, you can reach out to us and we'll provide you with all of that information. With that, again, thank you all for joining us this afternoon in terms of our presentation, and we're open now for question and answer. And we certainly will have the answers for the questions that you have, and I'm handing back over to Renee.
Thank you so much, Kevin and team. I think it was a very informative session, and the information and the context that you provided at the end around the stock price is very helpful to many persons, I'm sure. So as we are going into the Q&A, and congratulations, before I go any further, congratulations to the KP team for an excellent performance. Congratulations on 1 billion. Congratulations on 1 million. I'm sure that the shareholders are happy about that as well. So as we are about to go into the Q&A, I'm going to invite both Tatisha and Anne-Ray to join us back on screen, because the questions do span the presentations from each of you. So there are a number of community questions, and we will begin with a question that I think actually also helps to frame how persons can invest in KPREIT, right? The question is from Adrian Lang, and the question is, how do you go about acquiring the Cayman shares from Jamaica?
You mean Cayman Properties from Jamaica? I mean, because our shares are listed on the Jamaica Stock Exchange, so you can call your broker and tell them you want to buy KP shares, your broker in Jamaica. In fact, we did a social media post recently which listed all the stockbrokers. No bias to anyone. You can reach out to them if you want to buy KPREIT shares in Jamaica. In terms of how we scout properties in Cayman, if that was the question, we do have relationships, long-standing relationships in Cayman Islands, and so many new relationships have developed over the last 2 years, because I talk about KP's brand so much. KP has a really strong brand, certainly in Jamaica and in the Cayman Islands. Investment opportunities come to us all the time, and we just have to evaluate each investment opportunity and see if it fits with our metrics. We do have specific requirements, things like, as I mentioned before in the presentation, like immediate cash flow generating, and it should be able to give us cash on cash returns that's in the double digit. Again, most of our investments are in hard currency, are in US dollars or Cayman dollars. And, if you can get a double digit return on hard currency, I think that's a great move. And that has borne fruit in terms of our performance as we've outlined today.
Just to try to add a little bit of clarity to that as well, Kevin, in terms of the group structure, Kingston Properties Limited is a parent company which consolidates the Cayman company, Kingston Properties Cayman, and Kingston Properties that's listed on the stock exchange. So that's where you can invest as part of the as part of KPL, Kingston Properties Limited, and would have opportunity to basically share the results from the Cayman portfolio. So it's the entity Kingston Properties Limited is a consolidated entity on the Jamaica Stock Exchange. So your broker will help you to invest in KPL Jamaica, which you end up participating in the Cayman portfolio from that.
Thank you for that clarity. I think we did get a question that is not reflected here, but we did get a question about the difference between the group and the company as it is done in your audited financials. So thank you for that clarity. The next question is asking how do I get in touch with the IRO to ask my questions? Both Tatisha and Kevin would have mentioned the IRO, so we'd love to have that information to share with the audience.
Sure. You can contact us on any of our numbers, 876-754-7840, or via email at info@kpreit.com. We also have our website, so you can go on our website. Information is provided there as well. Yeah.
And our social media as well. We're responsive there.
Okay, wonderful. How does KPREIT compare to other real estate companies listed on the JSE?
Yeah. So that, I think it's something best answered by a broker who does that sort of comparison. One of the things that we've found very difficult to do is that different companies have different investment strategies. So it's not necessarily comparing apples with apples when you look at a company like ours that is more heavily skewed towards immediate cash flow generating real estate opportunities, as opposed to a company that is primarily focused on greenfield development, where it takes a longer time to cash flow, and that will show differences in performance. But in terms of things, say like dividend yield, we are certainly one of the top paying dividend yield real estate listed companies on the Jamaica Stock Exchange. In terms of things like return on average equity, we are one of the top performing real estate investment companies. And again, this is a kind of comparison that I think is probably best done by a broker, because I'll spout too much of my biases right here.
Okay, thank you for that. Next question. Are there plans to increase the dividend yield?
Well, that's a double-edged sword. I mean, the stock price goes to $10 tomorrow, and our FFO increases by 5%. Will that increase the dividend yield? Not sure. Do you want the stock price to go down or to stay constant? You have to make that decision. At the end of the day, the dividend payout is dependent on what our FFO is. Or if which we've done from time to time, made special dividend payments. If we've made a big gain on a sale, for example. So you could see the dividend yield being anywhere between 3 or 4.5%. Depending on how the stock price actually performs.
Understood. What is the benefit of investing in a stock like KPREIT?
Yeah, well, the other thing, as I said, one of the main things, I think it gives you exposure to a diverse portfolio of real estate assets. So different types of real estate assets, whether it's an office building or a warehouse, but also gives you exposure to real estate in different markets, different countries. We mentioned we're in Jamaica, we're in the Cayman Islands, which is a tax neutral economy. We're in the US, and we're looking at other markets as well. The other thing too is, let's, for argument's sake, you had $50,000, and I'm just pulling a number out of the hat. It's not indicative of anything. You had $50,000. You have many options you could look at what to do with that. You could keep that in a savings account. You could, buy, treasury bills or something, or you could buy a stock such as KP. we've looked at, for example, let's say you had funds sitting down in a savings account, which some people tend to think that is some form of investment. If you have funds sitting in a savings account, you're basically earning less than 1% on that $50,000. Whereas if you had bought KP stock, you could earn, just from dividends alone, at least 3% in US dollars. So I think that's a huge benefit if you're looking at all the different investment options that are out there. Consider a REIT, because real estate is one of the best performing asset classes over the long period. And, studies upon studies upon studies have proven that. And particularly for KP, we do focus on generating cash flow to pay dividends to our shareholders consistently and competitively.
So I'm hearing you say, one, you're getting the ability to diversify your portfolio without having to do all the hard work yourself.
Correct.
Two, you're also getting to earn in US dollars through the dividends. Three, you're likely to get dividends because KP is consistent with dividend payments.
Correct.
Right.
And let me add four. I think we also have a fairly strong team that will help to manage your investment. So one of the fundamentals of good investing is to, if you are not able to do it yourself, is to ensure that those who are handling your funds is capable of doing that. We do have a strong and diverse board that is covering a wide spectrum of discipline. We have a strong leadership team here, and a strong team in general that continuously strive to deliver good results for our stakeholders. And I think that's one of the key things that you really ought to consider a KP with a good track record of delivering good results. And you'll see the trends over the last 10 years, the last 5 years have all been strong performance, primarily because we have a good strategy that we're executing on well.
I agree with the importance of a very strong team.
Yeah.
And I believe you're going to stay on the floor for this one. What does LTV, or loan to value ratio, mean?
Right. So this pretty much that is the level at which your loan compares to your underlying assets. So when you go to the financing institutions, they will sort of set restrictions on how high your total loan book should be in comparison to your asset values. And for us, primarily that's about 70%. The financing institutions tend to limit your borrowing to about 70% of your asset values. We typically finance at a lower level than that for our being conservative and managing our leverage properly. So we really have quite a bit of room to actually leverage the business for growth. So we typically finance either through debt or equity or some mix of that, or probably even more exotic stuff like your partnerships and so on. But from a debt perspective, we do have the capacity just from those covenants that we have in terms of loan, the amount of loan that we can have compared to the value of our assets.
Understood. So for those who may not have the deeper understanding or exposure to something like LTV, it is similar on the personal finance side to a DSR, a debt servicing ratio kind of situation.
Correct.
Right. All right. So thank you for that. What factors impacted your ability to meet the targets set out in your rights issue projections? This would have been around 2018, 2019, I believe.
2019 projections would have factored in doing a number of raises. I assume you're talking about getting to assets under management, if that's the question. We had factored in doing a number of raises from 2019. However, there was a major global event that happened in the midst of that sort of changed that trajectory. And certainly what we've observed in the market over the last year and a half, at least, market hasn't particularly been friendly to new capital raises. So we're happy that we are progressing at the pace that we are. We're fairly comfortable with it because we are remaining profitable. If you notice from 2019 that we have been a profitable company during that period, and steady as it goes is our preference.
Thank you for that. Are there plans to buy back shares this financial year?
We look at it as an opportunistic thing. So if there is some value in doing that, then it's something that we'll consider. But it's not something that is on the cards immediately. But anything can change in a few months' time.
Understood. ESG, Tatisha, is KPREIT a fully green company, or KPL a fully green company? And what is the progress of that? I believe you would have shared on that earlier. And if there's any other context you'd like to give, you can go ahead and do so.
Sure. So we're not fully green as yet. We're hoping to get there. But of course, there is a significant investment that involves getting the international certification, for example. So currently, 3 of our local properties, that's Red Hills Road, the Grenada Crescent, as well as the East Ashanam Room properties, those are the ones that's participated in the Green Business Jamaica program. And so those are the ones that are currently receive that gold award. So of course it is in our plans, and we're just taking incremental steps to get there. We are planning also to, as I had outlined in the presentation, implement some other policies and put some other systems in place, but also to add some of the other properties as we go along. We're planning to roll out maybe a more templated approach to, say, the Cayman properties. They currently do not have a similar program to the Jamaica business program that we have here. So we are looking at, for example, we change out the windows. That was a part of ensuring that there is energy efficiency. We've been looking at and changing out old conventional ACs as they come up. We have LED lights there. So across all our properties, we've been looking at how we can better manage energy and to implement some sort of the program that we currently have locally.
Sounds good. This one is also for you, I believe. Is there currently an employee stock purchase program?
Not officially. But of course, we're always looking at how we are able to give back to the team and have the team participate in, whether it's, we're having some form of rights or some form of APOs. So it's something that we're looking at, but not yet.
Okay, thank you. Are there any plans to get into residential real estate, whether locally or overseas?
Yeah, I mean, if you look back on the charter, we had a breakout of the different groups. I think we're about 7% of our portfolio is in residential real estate, primarily in the Cayman Islands and in the US. No residential real estate investment here in Jamaica. It is a segment of the market that we'd like. We've done very well in that sector. Back in 2015, 2016, about 70% of our portfolio was in residential real estate. So we do look for opportunities when they come up. So it is something that we keep on the radar.
Clear. And our final question from the community at this time is, how does your treatment of fair value gains differ from others in the market?
I defer to you, Mr. Francis.
Yeah, I mean, I don't think there's much difference in terms of fair value itself, except the fundamental difference of how some companies do it. So as Kevin said, we have a pretty conservative policy where we look at it, or assets over a 2-year cycle. And we tend to ensure that we remain conservative in how high we carry the values, especially when we look at the portfolio in terms of whether we were able to realize those values over a short period of time, let's say a 12-month marketing period. I think most companies typically use some form of an investment approach because we're holding properties for investment purposes, and I think that's the general approach that similar companies would adopt. But I think from a comparison perspective, and just an observation on what I've seen, I think KP is, from a difference perspective, is more on the conservative side, so as not to overinflate the assets. And as Kevin says, that has worked well for us in terms of us realizing these values and the fair value, the actual fair values when we do make a disposal of an asset. For instance, what we did last year. So I think it's similar approach in terms of how the fair values are computed, but in terms of what we carry as our carrying value in our books and the level of uplifts, I think is where you might see some difference with similar companies.
Yeah, and to add to that, I mean, as you mentioned at the first part, it's the frequency of appraisals. We tend to do it on a 2-year cycle for properties, and I think there are some other companies that adopt a more frequent approach to appraisal, booking fair value uplifts. Those are usually stated in the audited financial statements. Certainly for us, that is noted in our financial statement, what our policy is. So you'd have to look at the different companies and see what their policy is and how they differ.
Okay, so I believe that was our final question. Thank you so much, lady and gentlemen, for making yourselves available to share with your shareholders and to inform the public about the performance of KP over the last financial year. So as we are preparing to close, I'd like to hand over to you one last time, Kevin, to give your closing remarks. I will come back and terminate our meeting, and then we will have a video to share with the viewing audience from KP.
Okay, thank you again, and we want to express our deep appreciation to the LGI team for your continued support in providing a platform for Kingston Properties Limited to speak to the market, to provide more information on the company, to answer questions that investors or prospective investors may have about the company or about the stock itself. And I just want to focus again on, reminding, just reiterating our performance. We reported net profit increase of 22% year on year when we compare 2023 over 2022. And over the last 5 years, on average, we've grown at 16% per annum. That remains a fairly aggressive level of growth for a real estate investment company, and we want to continue to grow at that pace. We hope that that will translate into the stock's performance going forward, because once people have information, particularly information about the performance of the company, I think that will feed into the performance of the stock. So thank you again for the platform, and thank you to my team who've worked extremely, extremely hard in 2023 and continue to do yeoman's work in creating value for shareholders. And we hope to continue that journey in 2024 and many more years after that.
Thank you so much, Kevin. And again, thank you to the KPL team and to the viewing and listening audience. It has been my pleasure moderating this call, and congratulations again to the KP team. We look forward to seeing more great things from you. We have one comment from Lisa Gomes. She has said, keep up the great work on behalf of the shareholders. She's also asking, when is she getting her dividends? So
we pay dividends twice per year, typically in May and November. So
thank you for that. So with that, we officially end this FY 2023 earnings call with KP. We thank you again, and we encourage persons to subscribe to this channel for more earnings calls, for more investor relations content, more investment content, as we seek to continue the good work that Kevin has commended us for. We thank you for taking the opportunity to be transparent with your shareholders. We thank you for taking the lead on investor relations in the market. Thank you so much.
Thanks for having us.